Hey everybody, this is Jim at SP500chart.com coming to you at about 12 after 4 on Cinco de Mayo, the 5th of May. And before we take a look at the chart, I need to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and please make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we close, according to the BATS exchange, which generates this particular chart, we close at 1884.51, which is technically above 1884. But you can't really tell. So it really, for all practical purposes, it's not. But it's nice to at least be knocking on the door again. Today was an interesting day where we had a little bit of volatility. We started out fairly weak, and actually, even though I drew this highlighted line on the chart over the weekend, we came down and momentarily got a little bit under that before recovering and heading back up, where we spent most of the day, not all of it, but most of the day over 1880. And now, as I look at the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, you know what I'm saying? You probably know this sort of looks more like an inverted head and shoulders pattern now with this dip we had today than it has at any other point in time. However, I mentioned over the weekend that we may be seeing the formation of a wedge. And if we are seeing a rising wedge, it's a kind of a funky looking one if this is what it ends up being. And the reason I say that is it's really wide and it gets really narrow in a hurry. Not the typical shape I'm used to seeing in wedges, where usually they would be, in other words, if this were a wedge that may last for a month and a half, I would expect something more like that as opposed to that. Still think it's worth keeping an eye on, however. And at some point, maybe in the next couple of days, we'll have a little bit more information. One reason that kind of takes away from the possibility of this being as a wedge is that usually wedges do a very good job of tagging support and resistance a number of times. They usually don't go after support twice or resistance twice. It's usually an orderly alternation between resistance and support. But if you'll follow me on this, we have support, resistance, support, support. So that's a little atypical. So let's zoom in just a little bit. And what I'll show you real quickly here is we do have what looks like, even on the 5-minute chart, could be the setup of an inverted pattern right here with something of a, what's the word I'm looking for, a hairpin or a needle dip for that inverted head. But as always, to throw a little bit of confusion into the picture, we also have this trend line that was good for about 3 days, and that broke. So something's got to give here, guys. We either need to get over this little trend line, and albeit that is a minor, this is a line of minor significance, because when we go out on a 10-minute chart, you can see that that's just something that's kind of going on internal to the larger picture. So to make a long story short, and to make this more palatable for those of you who are in a hurry, we bounced today pretty much at that support line, and we finished the day knocking on a breakout again of 1884. 1884 and change is not a breakout. We need, like I said, for me to feel good about calling that 1957, 1958 target, hey. So anyway, sorry, my wife just came into my office and had a question for me. Basically, still looking for that close over 1900. Then I'll feel real good about that 1957, 1958. So guys, there's your video for Cinco de Mayo, May 5th, 2014. Thank you for taking time out of your day to watch this, and thank you for your very kind support.